Typically, as a director of a limited company, you want to pay yourself a salary that's equal to the standard personal allowance. And the reason for this is that although you will be paying employers' national insurance at a marginal rate of 15%, you'll be saving on corporation tax, which is 19% or maybe even higher, depending on the level of profits of your company. And so for this reason, it will be optimal for your tax affairs if you pay yourself £12,570 as a salary, although there are some instances where this isn't the case, and I'm going to go into those in this video. So the first reason would be that you don't have the full personal allowance. Now this could be because you owe some tax from the last tax year and it's being collected through your tax code. So you might have, instead of 1257L, you might have a code that starts with something like 900 instead. And in those cases, you want to pay yourself the revised personal allowance, and then that will be optimizing your tax bill. In determining the optimal salary to pay yourself as the director of a limited company, it's really the interaction between what you're doing as an individual and what's going on in your limited company. So for example, if you've got a little side hustle and it makes you some money of say like £3,570 selling stuff on like Etsy, then the salary you want to pay yourself from your limited company will be £9,000. In other words, the residual to make up the total personal allowance. And then you pay the rest of the money in dividends, and that would be an optimal allocation for you. So what you need to do is have quite a powerful tax calculation package that looks at what's going on in your personal life and in your business life, and then that way you can save on tax. The advantage of using a spreadsheet to track your taxes is you can keep a log of all the income that you've got from multiple sources, and it will automatically just analyze it and tax it for you. You also might be, for example, over 55 and you're drawing on a defined benefit pension, in which case, again, you'll want to offset that against the salary you're paying yourself, and then that will be the optimal solution for yourself. If you have a lot of pension or side hustle income, then you might want to pay yourself £5,000 salary from your limited company, as that's the threshold at which you start paying employers' national insurance, so you'll still be saving the corporation tax. If you need a credit for your state pension, then you're going to want to pay yourself the lower earnings limit, which is £6,500 as a salary. If you have a very successful limited company and potentially want to take income of over £100,000, then your personal allowance will be eroded. And so in this instance, you will want to reduce the salary that you're paying yourselves in order to lower the tax bill. So here I put in 6,500 instead. My tax bill has gone down by about £300. So again, it's really useful to have a spreadsheet to do all the calculations. And then another thing you can do is to make pension contributions, and that will of course lower your tax bill because pension contributions are made before any taxes are deducted. So there's no corporation tax on them, no employers' national insurance, no employees' national insurance, no dividend tax, nothing. So a pension contribution from a limited company is a very useful thing. And rental property income or interest payments that you get might also cause you to change the salary you want to take from your limited company. So by using this spreadsheet and maybe sharing it with your accountant, you can work out the optimal director's salary to pay yourself. I'll put a link in the description as to how you can get hold of it.